Hello, and welcome to another day of TA the Degen way. Well, it's been a little bit since we've done any updates on the crypto market, and it just has to do with the liquidity cycle. I was forecasting a major top in the market in the very week that we've seen a major top in the market for 9 months. Just kind of following the time cycles of those things, and I do believe that now we've seen at least a sufficient pullback where we should be looking for some upward price rise. And it's a little hard to talk about altcoins without talking about Bitcoin, which I will save for the end. But what I want to talk about is FET, because I do think that there is far more potential in altcoins if they are real and backed, and there's perceived value there, and FET and these AI merged token here certainly has that. And I want to jump into the chart here, and we'll take a look. So let's switch to our Trading View Ideas page here. So here was my last Bitcoin update. You can see the recent FET update, which we'll get into in just a second. Bitcoin, way back, I think it was June of last year in 2023 was when I put the June 15th of 2023. I'm just following this liquidity cycle, just how long it takes to see these directional moves. Here we have a down cycle, a sideways cycle, an up cycle, down, and here we've had a very nice upward push. And look at the very week that we were looking for that top. And you can see why I took a break. We kind of reached this time period. We've seen the kind of price action that I would expect. But as far as downside, why am I looking for upside on Bitcoin? Here is my pullback potentials following that significant top call, which I'm going to say was accurate. It was accurate right to the very week, right in the very price range. Those were two maximums on the probability scale that by that point in time we should be out of fuel, and by that price level we should be out of fuel. So here, I was looking for this support right here. We've been hitting that, and if let's jump into FET, and you can see, if we go back to our Trading View Ideas page, and this is just a Degen-Dynasty on Trading View. You can follow us here. We have a free Discord. There's a link in the description where I'm posting my trading ideas, my thoughts, and answering questions on how I view the market, how I analyze the market, which we'll get into here with FET. But you can find us here on Trading View, or else you can join a free Discord. Like, share, subscribe, help us, support us in our effort. But here in FET, you can see, if we just hop back to the chart here, what do we want to look at? We want to look at when and where should we be interested in taking a trade after this big top. Well, it comes down to significant levels. Whether you're investing or you're trading, investing is really nothing more than just a very slow form of trading. You are making a purchase, looking for an adequate amount of percentage gain versus drawdown. And we are certainly at a significant level. So what levels can we look at? If we flip back to our graphic here, just our previous support and resistance. So if we look here, this was our last major resistance level here on the weekly. This is where we topped and we pulled back. We had another big rip to the upside, and now we've pulled back. Well, to where? To this major support resistance flip. I mean, that's a positive on our side. Let's look at this momentum oscillator on the weekly. That's a positive on our side. Let's look at the curvature of the momentum coming down. I mean, we're pretty much straight up and down at max momentum at critical support. That's on our side. Weekly momentum's on our side. Look at this VWAP coming up. That's on our side. Money flow, dancing around that zero line, but you can see that we are at critical macro support. What about volume? Here's our volume profile. Well, we're at the value area low. I mean, I would be expecting at least a push up. I mean, I've got this first little window here. I mean, that's a 20% rise in price. I mean, that's significant, and that would be nothing. So, I mean, there's a lot of confluence on this area to be looking for a change in momentum. What else can we look at for price levels? If we take our retrace tool here, how much of this entire move, here's the low, here's the high, how much did we retrace here? We're on a log scale, so we're considering how much percent of that move have we given back. The average is 50%. Well, look at where we're at. If we measure from swing low to swing high, we are at 50% retrace. What else can we look at for significant levels here? Let's go back to our graphic. Also, we looked at our previous support and resistance on the macro level. We're there. We looked at our volume level. We're there. Our Fibonacci retrace level. I mean, it's not Fibonacci really anything. We're just considering what percentage of the move up did we give back? The average pullback is 50%. What about our Gann and octave levels? So let's pull out our Gann box once. Let's flip back to the chart here. And let's look at our Gann box levels and our octave levels. So we got a lot of support here at this 75-cent, mark. I mean, we're talking about a window here. I've got an accumulation box here. I'm going to be looking for a price rise up to here, but my main target is this first 20% rise, coming up to this wall of volume here, this high volume node at the POC. We have macro support. That's going to entice buying. It's a major support resistance flip. We've given back 50% of this entire run up. Momentum is reaching its culmination. Momentum on the oscillator is reaching its culmination. We should be expecting some form of price rise here. There's a lot of things to look at there in that 75-cent mark. So let's delete everything. Let's look at our Gann box levels. So let's just start. Let's just play. Let's just start at our swing low. We're looking for proportional relationship in the price action. I don't see anything there. What I want to do is I want to go from this high to this low. I don't really think that there's anything our Gann box is really going to tell us here. We can look time-wise, price-wise, that I don't... you can't adjust the Gann box to look at or for the logarithmic scale. What we could do to get these it's these percentages of change that matter. This is a proportional relationship. So when we're looking at this Gann box, but only considering dollar, not percentage change, this would be 38% of this entire push up. this would be 61.8% of this entire push up. But we want to look at the relationship between the percentage change, which is why I use this fib scale, which it has nothing to do with Fibonacci. I mean, aside from the fact that they use those numbers. But if we turn this on and we put on the same percentages, we can still look at those same relationships, but according to a log scale, looking at percentage of change. So now if we consider this to be our levels in our Gann box, this would be 38.2% of this entire move up. 50%, you know, I mean, it's the same principle. And, you know, we're at the 50% mark. What about our octave levels? Here. So for that, I set the Gann scale to eighths. The Gann scale, the fib scale. And I've changed it to white. Now what we want to do is we want to look at this initial range down here, and we're looking for a proportional relationship. So we want to, you know, start at the low and go to the high. You know, we can see here we got this high. You know, here's one range. And what this is just a repeating size of this range. You know, here's 1, 2, 3, 4, 5, and usually around 5 repetitions of that range. Sometimes it's all the way up to 8. You see a major pullback. You know, here we made it about 6. So I mean, by the time, you know, we're getting to 5, 6 ranges, you know, you should be looking for weakness, and that's what we receive. And look at what level, you know, we're coming back to. This is a significant proportional level on that octave scale.